What is our approach to investing? This is Bill Scheid from Applied Finance Research, and that's a question we get from time to time. So in this video, we're going to answer that question in one sentence. So in one sentence, what we do is we use academically tested market concepts to develop rules-based systems with a statistical edge. Now, that's a bit of a mouthful, so let's break that sentence down one concept at a time. Let's start with academically tested. There's a large amount of research published by a number of authors testing and proving the value of the concepts that underlie our systems. This research has been published in high-profile publications going back decades, some as far as the 1960s. So the market concepts we're using are not new or experimental, they're tested and proven. The way we apply them is unique, but the concepts themselves are not some new fad that we just invented. And not only is there all this research pointing to the effectiveness of the concepts we use, but we've been using our own systems with our own money for more than a decade, and we know these concepts produce results. Now let's go to develop, as in research and develop. A huge amount of research goes into each of our systems, and our R&D process is highly scientific based on the scientific method. It's reproducible and it's verifiable, so anyone can reproduce our results for themselves. In fact, we make a specific point in all of our courses to teach students exactly how they can replicate the research and results we present. No black boxes, and we don't give away fishes, we teach people how to fish. All of our systems are focused on real-world application, not just theory, and we ourselves invest in the systems that we teach. Next, let's take a look at what we mean by rules-based systems. According to Dr. Van Tharp, there are three general types of investing or trading systems, and they occur along a spectrum. On one end of the spectrum, we have discretionary systems, which are based largely or entirely on a trader or investor's discretion or intuition. In the middle of the spectrum, we have rules-based discretionary systems, which are based on rules but still have room for the trader or investor to apply their discretion and interpretation. And then there are rules-based systems at the other end of the spectrum, and these are based entirely on a set of rules that covers everything from entry to exit to position sizing and everything in between. Our systems are rules-based. We do not use intuition or discretion, so it's a very disciplined approach. The rules are clear and easy to execute. It's cut and dry. You don't have to pull your hair out figuring out what to do. Our systems are not automated, meaning we're still executing the systems ourselves as humans instead of having computers do it, but because the rules are so clear, it could be easily programmed for automated execution if you wanted to do that. Now, let's take a look at what we mean by statistical edge. So we use statistical analysis to manage risk and quantify system performance. We think like the house. We put statistics on our side, we put the odds in our favor, and we build systems with a quantifiable positive expectancy and market edge. So there it is in one sentence, our approach to investing. We use academically tested market concepts to develop rules-based systems with a statistical edge. This is Bill Scheid from Applied Finance Research. Thank you for watching and happy investing.